It is believed that a lot of things to learn in trading is for free, it's actually out there, but is it really out there? We just viewed 6 markets and I only found 1 market as worthy of trading. This is a free indicator, by the way. Now, the GDP state of the New Zealand dollar did see recent slight growth.
So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang.
All right, so last week we discussed about trading strategies and trading techniques. It was an entire deep dive of research and I really like that activity. Honestly, this week I have spent more time dealing with the office than dealing with trading also, but I still didn't let it just slide by because I kept opening the chart and I just kept telling myself, we need to learn something, go online, go out there, learn it. It is believed that a lot of things to learn in trading is for free, it's actually out there, but is it really out there? Well, I think there's one video that will really help anybody who is into trading, and it's called market structure. Everything about market structure is literally the fact that you need to learn and understand. Also, I like the way the person taught market structure and incorporated their own view of supply and demand trading in it. So last week we decided between swing trading, breakout trading and momentum trading. Those are the 3 trading strategies we're going to be picking up. When it comes to the technique, I actually wanted to go for retest first and foremost by Trader Nick, which really he focuses a lot more heavily on fundamental. And then I would also go to retrace trend line. And last but not least I was going to go for supply and demand by Burns Kropinski. So in looking at all of this, these were the 3 top performance technique I was looking to utilize until I saw this video. Yep, right here. When I saw this video, it all changed. And I'm recommending this video to anybody who really wants to understand market structure. I don't know if he's a good trader or if he's a bad trader or scam or whatever, but what I'm talking about right here is this specific video where he explains market structure in 68 minutes. It is a whole lot, and it is the simplest form of trading market structure I've ever seen. Matter of fact, it is what led me to this point. Right here, this is what led me to this point. Now, what do I have on my chart? There are ways to draw market structure. You could decide to draw highs and lows. You could decide to use the path tools to draw highland, to draw your highs and lows, your chart pattern. But I do not want to be drawing highs and lows or drawing lines up and down my chart because it might get confusing. So what I did was I used the one indicator that is completely market structure related. It is called the Zigzag indicator. I think people have seen me here use it multiple times. So I'm just going to remove the ones here and I'm just going to show you guys. This is the daily time frame of Australian dollar versus the US dollar, right? This is the daily time frame. Let's keep everything fresh and clean. Absolutely nothing to delete, right? We remove everything. And I'm simply going to go to the indicator. This is a free indicator, by the way. I'm going to select on Zigzag indicator. So what it does is it tells me when price deviates by a certain percentage. That is 5% of price deviation. This is what it is set at currently over 5 periods. Now, it is huge. As you can see, it's giving me the lower. This was a lower low. This was a higher high. This is a lower low. This is a lower high. This is a lower low. Now this is a higher high. So basically, what all of this is saying is this market is changing structure. We could do it on any chart anywhere. Let's go to the British pound against the US dollar. I would take this out and let's just put it in again. I want to take everything out, every single thing that I have ever had on the chart. and I'll just simply say zigzag indicator. Now, obviously, this is a long thing to look at, right? It's really long. The structure is huge. These are days per candle, right? So you could go into the lower time frame and say, okay, you want to see the lower time frame, but it won't really change the should I call it depth of field you use it. So what you do is you reduce percentage changes. So what I usually do is I come here and I start to pull this lower. Now what this does for me is it shows me the smaller time frame structure. And I've been using this all week, right? Using this all week for a long time now. I've been actually been using it. So I'm looking at this at 2%, right? And I'm going to look at it at the 4 hours. Okay, so in the 4 hours, this is nice enough for me to say, okay, I want to use this as my higher time frame visibility. So I'll say this is my higher time frame. I'll go to settings and I'm turn this to red. So what I want to try next is I want to try a lower time frame indicator, which is still a zigzag indicator, but this time I will set it to 1. Oh, that's a lot. That's a mistake. So 1. So now I have 2 time frame structures showing up on the chart, meaning I can sit on the 1 hour and observe when price is making its way towards a higher time frame lower low, which, if you know supply and demand, the lower lows are usually your demand zones. So all of these places around the demand zone. Let me just get the proper move. So basically, just before the move up, this is a demand a supply zone, a demand zone, sorry. And if this is the high, because this is how structure works, right? We have broken this low. As it is, we've broken this low. So if we see price do this, right? If we see price, as we're looking at price right now, price has broken this low. So it's already here. If we see price do this, which means it has now broken this new low. Automatically, what that means is we are now on the lower time frame, on this 1 hour time frame, we are now moving in a downtrend to at least get to this demand zone. So we are now supplying, the market is now supplying more than the demand until it gets to the zone. Now again, we will then watch out for the higher time frame. If the higher time frame is now serious about continuing its own uptrend, as you can see, it's been doing it. Now take note of the red. Take note of the red. Take note of the red. I think I'll take away this blue so it doesn't confuse you. So if the higher time frame is now serious about its move up, then price should do this instead. So price should come from here, maybe come to retest around here, but not go beyond this low and then push up again. So this is what the higher time frame should look like, right? And then on the lower time frame, which is on the 1 hour, again, what we want to see is, I'll bring this back to show. So what we want to see on the lower time frame is this. We want to see price do this, right? So come up, go down, come up, go down, come up, then finally touch here. And then if the respect, right, if the higher time frame wants to really push up, we start to see this show now instead. So till the market finally breaks above the lower time frame low and just keeps going in that direction. So I'll make this blue. Yeah, it's a blue. So I think the whole thing derailed a little bit away from what I was expecting. All right, this is what we expect on the lower and also on the higher time frame. if we're going with demand and supply. Now, this is exactly what I actually expect for British pound US dollar. But this is just technical analysis alone. You can see it's a naked chart and there's only two things I'm using here. The zigzag indicator repeated over each other. Also, I learned something about volume. So volume indicators. Volume showing when the push turns positive, when the push turns negative. Meaning I'll start to have my chart work in a totally different manner from the way people who had always been on this channel has always seen it. Also, another thing, now another big thing is this. I've always been a fan of fundamentals and I want to incorporate fundamental. So like I said, I was going to work on a calculator and I finally achieved one. Well, I achieved one on Excel. One free one for myself, though it's not as robust as it should be, because there are a lot of nuances that I need to do per news type. So something like a CPI where it's supposed to be at a certain rate. If it's 50 and above, then it's good, something like that. There are some real deep nuances I can't explain in this video because I don't want this video to be lengthy. So all those things I have not incorporated them yet, but I'm just looking at a plain normalization. If it is higher than prior, it is bullish. If it is lower than prior, it is bearish. If it is higher than forecast, it is bullish. Lower than forecast, it is bearish. That is on where it applies, right? So what I did was I brought in all the news data from investing.com, from the economic calendar of investing.com. So because this file is the amount of calculations I need to do is quite a lot. I always see this happening. So calculating threads, 8 threads, and it calculates heavily. I first and foremost transform because it comes in words of K, T, percentages. So I transform them to just pure numbers, right? After transforming them to numbers, I separate each issue. So for like central bank rates across all currency, I have them calculated here. Now, same thing applies for GDP. It's supposed to be quarter over quarter for all of them. So I use quarter over quarter for all the GDP. CPI, similar situation. So CPI, similar situation. Unemployment rates. So I just took like the top sets of news and then the COT data, right? The top sets of news and COT data. I have a video where I explained how to extract COT data into Excel, where I don't even have to read the COT data. All I just do is apply these miracles on it, and in a matter of minutes, I have gotten the full bias and perspective of the COT information. So I'm going to do that right here in this video also. So, but I can't go like in depth. So what I usually do is I go to investmacro.com, and I'm just going to do that real quick in this video. So I'll speed this all up. Okay, so I already have the last file. So they were supposed to release one today. I don't know, they've not released it yet, but when they do release one today, I would have my COT data updated. So following the current situation of the COT information, let's take a good view of what it's showing. So following the current situation of the COT data, we're focusing on just currencies for now. On just currencies, right? So for something like the US dollar, right? Let's go straight to the US dollar right there. So in the US dollar, we had the commercial buyers being neutral. Actually, it's slightly bearish. So the commercial traders are slightly bearish on it, but their change of trade is actually bearish, like very clearly bearish. It's about 3%, which is a lot. It's a lot. You compare to the rest, you can see how much 3% is compared to the rest move. Also, for retail traders were also bearish on the US dollar last week, and they actually became bullish. Slowly, they are becoming bullish. So this week, we want to see if they actually became more bearish or became more bullish. Same thing applies across board for all the other currencies here, which I will then in turn pull into this sheet. And what I finally did, I don't want to show you guys this yet. What I finally did was I have each currency and their situations, right? Their situations, their directions somewhat. What I did was, so for central bank rate, it is mostly always 50% because they don't just change rate anyhow. Whenever they change rates, it clearly shows. I mean, let's look for central bank changes and see rate changes to see when that happens. So I'm just going to say rate decision. Yeah, so these are all the rate decisions from all the different banks, and I want to just look for where we have like rate change or deviated from expectation. So you can see how far back I'm going just to look for this. I can't find it here. Can't find anyone here. So let's just percentage view on all of them. So yeah, that's nice. That's nice. So I can't find any currency having like, okay, apart from this time. So the euro, they actually did change their rates, but it was based on expectation. That was back as of March 6th of March. There was a rate change. There are rate changes recently. Yeah, this year. Yeah, the New Zealand dollar had a rate change 2 months ago. That was April. They had a rate change 2 months ago, but it was a change that met with expectation. People expected the change that was made. Same thing as of February. There was a rate change and people expected it and they were spot on. It's not as if the rate doesn't change, but whenever rate changes occur, there's also the mix of how far away from expectation is it. So this was not far away from expectation, so it won't have like, will have this impact. They reduced rates, they cut rates, they reduced their rate, so it would have the impact it's supposed to have, but it won't be as wild that it's supposed to be on the chart because traders expected it. Same thing applies to every other market out there. So what I did is I now have each currency sitting with their own information on a straight line like this. For me to it's not just going to be the final calculation from here that I'll be looking at, which is actually this, to be honest. It's not just going to be this final calculation that I will be looking at. I will also have to, groom my eyes and head to read beyond just this final showdown, because the final showdown tells me yes, the market is moving in most likely this direction, but why is it moving in this direction? Like, what happened? What is really making it move in this direction? So for example, we can say the New Zealand dollar is bullish, like it is clearly bullish. In fact, it is the only thing here that has a clear show of bullish response compared to every other thing here, while the Swiss franc is the only thing that is showing quite bearish here. So let's take a look at the New Zealand dollar. Let's focus in on the New Zealand dollar. So the New Zealand dollar has a flat central bank rate and nothing new, right? Let's check it out back here on the central bank rate for New Zealand dollar. So we see there was a rate change, but the rate change was not out of expectation. Hence, people are not surprised. People are not really scared by it. They are just, okay, fine, there was a change, but not beyond what we expected. So people are already prepared for it. It's just like you're preparing to go buy something. Let's say something is $100 or 100 units of $100, for example, right? And you, in your mind, you're expecting, oh, this thing might have, inflated up to about $120. So you take $120 with you and you get to the store where you want to buy that thing. If you get to the store where you want to buy that thing and they tell you the price is $120, of course you still feel bad that it went up, but you won't feel shocked because you expected $120. But in the case where you expected $120 for that same item and you picked up $120, you went there and they tell you, oh no, it's $150, you'll be like, what? That is way beyond your expectation, right? And the same thing applies for when you're expecting $120 and they tell you, oh, it was inflated, but it's just $105. You feel happy. It was inflated in all three cases, but because of your expectation, you either felt okay, worse off, or better off on that same situation. So that is exactly what's happening here. So the central bank situations are all okay, fine, they're just flatlined. Now we move on to GDP. Now the GDP state of the New Zealand dollar did see recent slight growth, not so much compared to what was expected, right? But it was okay. But their CPI information is outstanding, right? It's outstanding. Let's see the CPI information. All right, so you can see the CPI information. They went higher than expected, right? They went higher than expected, meaning they are strongly bullish. I'm still confused on that CPI information. I don't know if higher is better or lower, so I would adjust this, but I'll do that research in the meantime. But for now, let's just look at it like that. Unemployment rates, they had a better information on the unemployment rate. So let's go to the unemployment rates. So we can see unemployment rates, we expected it to go up to 5.3%, but they ended up retaining 5.1%. So you can see how expectation happened. So what happened? It was 5.1 and it is still 5.1, but people expected it to really go up. They expected unemployment to increase, but yet the information came out and said no, there was no increase, it was just the way it is. And now everybody is feeling, oh, that is better than we expected. That is a good reason to stay in such an economy. And that is why the New Zealand dollar right now is actually having a bullish trend in terms of the unemployment rate. Now we're going to look at the retail sales. This is a selling of things, people who sell retail things, like the retail sales rates in town. It is also a good information. The manufacturing PMIs, these are like price of manufacturing, right? Producer managers index. So they go around asking managers who are into manufacturing, okay, how do you see the economy based on purchasing of things? Purchase manager, I think it's purchasing managers index or providing, one of the two, but I know it's a manager index. So the managers say, oh, okay, so most of the managers are saying it is they like the economy now, meaning they can actually afford their necessities to produce materials. Same thing with services. So services are saying they also are okay with the price of things when it comes to purchasing things they need to work their business. Now, employment change. Did they witness like good employment change? So an increase in employment change in terms of, okay, they got more, they could handle more employment, they produce more jobs. That's what it means. So did they produce more jobs? Did they lose jobs? So in terms of job production, they are fine, they are okay. Now, producer price index, they really hit expectations here. So let's see PPI, and you can see the New Zealand dollar, they're all showing 0. So let's work on this. I think it's supposed to be percentages. Yeah, it's supposed to be percentages. So the previous one was 0.9%, negative 0.9%, and we were expecting just 0.2%. That is about not so much. And then all of a sudden we came out with the actual figures being 2.9%. That is a whole lot beyond the expectation, right? This is I think I made a mistake here. Is this consumer? Yeah, this is PPI, producer price index. So I'm supposed to rename this properly. Producer price index. So under PPI, this is the situation of the New Zealand dollar. And then we have the COT information, but I do not account the COT information into this. The COT information is just what are traders doing. It does not really affect the economy. That's the truth. What are traders doing? It doesn't really affect their economy. Traders follow the economy. So you shouldn't calculate their information into whether or not to buy or sell a market. What you should use it to do is just to understand the sentiment, the bias of big traders and small traders. So what we saw here is basically the New Zealand dollar is something you should be looking to buy, right? It's something you should be looking to buy. Now, I paired all of this to form the market currency pairs, and that is where I have this final page coming from, the trade finder page. So what this does for me is it just tells me straight up, looking at a currency pair and weighing all the situation it has, it tells me straight up which is better, which one is better to actually buy. I'm looking more into the buying perspective. So if it's telling me bearish, it's telling me it is better to buy the quote currency than to buy the base currency. If it's saying bullish, it's better to buy the base currency than to buy the quote currency. And if it says neutral, it means they are at quite loggerhead. They are not so far away from each other. So you can choose a certain direction of where you want to go. And in all of this, my information currently has me looking at a total of 10 currencies for the week. So as news comes in, you put in the news into this calculator, it recalculates, it tells me, okay, this currency is no longer looking so good to buy based on current news. So in those kind of currency, I won't be looking to buy. So these are the things I've learned in the past week. Like I said, I'm going to learn something, I'm going to come out here, I'm going to put it out for people to understand. So these are the things I've learned in the past week, and these things, they are not straightforward. So I'm going to try to make other videos where I will be less in a hurry, more straightforward with it, more explanatory, and then we'll see how we can transform this into the chart and then use it to learn. So let's attempt to do that with the most bullish thing right here, which is the New Zealand dollar against the Swiss franc. So hopping straight into my chart, NZD against Swiss franc. So according to that situation there, we're supposed to be buying the New Zealand dollar, right? We're supposed to be looking to buy the New Zealand dollar. But I'm looking at this chart right now and I do not see a way to buy this chart. Why? Because my technical analysis doesn't fit the premises of buying in this situation, and I will explain why. So again, I explained the blue line and the red line, which is what I am personally going to start using alongside with the volume profile. But let me explain this. So the reason is this: if I want to buy in this currency, I want to be seeing an uptrend, a good uptrend. Over here, I can see a break of structure to the downside. And what a break of structure does in the strategy I'm starting to use is, I'm expecting downtrends in this scenario, more downtrends. Now, what I'm going to sit and wait for is, if the news coming out keeps saying bullish, what I am expecting to see is, after price has done this, maybe whatever price is doing here, I'll call it consolidation. Price is going to find its way above this, right? It can be here, but it's just going to close well above here and retrace to retest and close above again. So until I see these two closes above on the higher time frame, especially on this daily time frame, I don't see a reason to buy in this market. So one thing is my fundamental analysis calculator telling me this is what you should buy. Another thing is the technical strategy I want to apply with. Is it also in line? So I'm just trying to have so many confluences, so many edge working in sync before I take a trade. That is what I am trying to do going forward. I won't just come because I see a buy over there, I'll just jump into the lower time frame and now I'll start trailing for things like, okay, this is a demand zone, so I'll just be waiting for price to come here, I'll buy to come to this level. Of course, you might make profit doing this, you might make profit doing that. Like, you might actually make profit if you try this week. There's a tendency you will. So you just, because price has actually returned towards this zone, if you just hit your buy, put your stop loss below this low, and you just target for this high, so you might be lucky to actually make profit, right? You might be lucky. So I mean, it's almost 3RR, right? 3 risk to reward ratio. But rather than do this, I want to see consecutive, uptrends, and this is going to be the lowest time frame I'm going to work into, the 1 hour time frame, right? The 1 hour time frame, that would be one of the, I think that should be my lowest time frame if I want to stick to swing trading, right? If I want to stick to swing trading, this should be my lowest time frame to actually ever come through to look at. And keeping my my zigzag indicator in focus as of this has become my standard 1 and 2 over 5 periods. So all I want to see is price really digging up on this time frame. If I want to see price, I want to see price breaking highs. So what highs in this particular zone? So I want to see price breaking. This is a clear high on this time frame, not like on the 1 hour time frame. On the lower time frames below the 1 hour, this is a clear high. I want to see price break beyond this. I want to see price create a low and break above that high. But I don't want to trade rushingly, right? I don't want to rush. So I already have a high that I'm watching out for. Like I said, all I want to see is price do the big time frame thing, right? On the daily, this is what I want to see. If price does this on the daily, I can start believing this. But if price doesn't do this on the daily, right, what I want to see is price do this on the smaller time frame. So for my smaller time frame trading, I want to see price do this, break above this high, retest, break above this high again. So this is what I want to see on the 1 hour. This is what I want to see on the 1 hour. So take note, anything on red is on the higher time frame from daily and above. Anything on blue is for the 1 hour, 2 hours, and the 4 hours. So on the daily and above, I want to see those upper hands. On this time frame, on the 1 hour time frame, I want to see this. So this break and this break. And when I can see both of these, I can then say, yes, I want to see this market as a market where I start to look for buying opportunities. So in other words, trading the New Zealand Swiss franc buy right now for me is a no yet for now, right? For now. So the next best performing thing is the Canadian dollar Swiss franc. As you can see, matter of fact, it's everything against the Swiss franc as the top performing. So another thing you need to understand is the Swiss franc has always been the most stable currency and economy in the world for a long time. You do not want to suddenly dive against such record. That is another thing you need to understand. So what I'm doing is everything against the Swiss franc. I'm going to check the market. Let's go to Canadian dollar and see if we do have an opportunity somewhat like that. No, this is the New Zealand. The Canadian dollar against the Swiss franc. Okay. So on the daily, I don't see a daily situation. You can see my red indicator, no miracles for me here. So I can't trade any of this. I can't trade this. I can't trade this. I'm just after everything against the Swiss franc. So the US dollar against the Swiss franc, do we have an opportunity there? I see the US dollar against the Swiss franc as the next best thing. And I will dive straight as usual into my daily. I'll apply my second indicator, which is the higher time frame indicator. I'll set it down to 2, color red as usual. And even here, I do not have a daily show of change of structure. So the daily structure hasn't changed. So that news may be short-term news, news that doesn't really last long. And currently, it seems like a good buying opportunity, but you just don't dive into this market whenever you feel free, right? I'm also looking at the red again here. So on the red, I'm not seeing it, but however, in the lower time frame, I'm seeing blessings, right? So in the lower time frame, I'm seeing blessings. I'm seeing price closing here, but price hasn't really closed above. Price hasn't closed above. Clearly, if I put this line right here, you see, okay, there's been a tiny close, but not clear, not too clear. The price has come, gone back up. It's all good, right? It's all good. In the lower time frame, I'm looking at that structure and I'm just, eyeballing the situation. Are we having good impulse moves? So what I want to see on this lower time frame, if I'm going to take a trade here, is, so price is currently here. If price continues this journey like this, so it has made its first higher high here. So I want to see a second higher high that retraces. So when the second higher high is made, what I mean is as price is moving from here right now, this particular move up that we're seeing, I want it to break above here, right? Break above, move a little bit, and then start to retrace. So under that retracement, that is the only point I can then say, all right, I'm looking for buying opportunities in this market, and that will be on the conditions that this is still telling me it's a bullish situation. Again, let's skip to this is the Euro Swiss franc. Okay, that is good. We're going to skip next to the British pound against the Swiss franc, and then last but not least, the euro against the Australian dollar. So let's say Euro AUD and Euro British pound Swiss franc. So British pound Swiss franc, I don't see a reason to even jump around in this market anymore. You can see clearly I've not seen a good uptrend, though since this is a good high, I'm waiting for price to do its miracle above this high, right? Waiting for price to do its miracle above this high on the daily. Then I can start looking at this market as something that's what's attempting. Moving on to the Euro Australian dollar. Yes, this is okay somewhat. Okay, so here we have it. We have something that is clearly in an uptrend, even on the higher time frame and on the lower time frame. So you can see lower low, lower high. I think I should just hide this. Yeah, so clearly this shows it right. So we've had the first break there, first break of structure right here. We've had another break of structure right here. So we're constantly getting good break of structure, right? Good breaks of structure. So what are we hoping for, right? We're hoping for this trend to continue, right? So we're hoping for price to find its way all the way up here and break structure and continue, which is the trend. It has retraced and it has met a good supply zone, a good demand zone. If you don't find it on the daily, you find it on the 4 hours. It has met it. You can see here, this was a very good demand zone right here, this small consolidation, and price just made a teeny touch and started running away. So this is it. So it means on the lower time frame here, I should be confidently looking for more reasons to trade this market. All right, so it means I can then go down to 2 hours, 1 hour, and I just start looking for reasons why this market should be worth buying. So you can see right here, this is one, a good buying opportunity. This is another one. This one is going up, so I'll just wait for price to go above this high and then retrace downwards towards any of this zones. So this zone is here, so this zone is here. This is the last candle to the impulse, so over here. And then my next view is also, if price goes beyond that, comes down here, I have this candle all the way to this last candle. So all of these are my current supply zones for Euro Australian dollar. So basically, after looking at how many markets we just viewed 1, 2, 3, 4, how many markets? We just viewed 6 markets, and I only found 1 market as worthy of trading. So I'm going to do the same thing over all the currencies, the ones that my calculator sees as bearish and bullish, and then finally I'd look through them in the same manner till I see one where I can take a trade. This is the new pattern. We're going to be attempting this for probably a month, 2 months, 3 months, 4 months, but we're going to be recording trades on Notion as usual. We have our usual Notion. I'm going to be redesigning the Notion. I think that's the next video I'll make. I'll redesign Notion and put it out there so you guys will see. So that is all for today. If you did enjoy and understood all the things we did, it was a lot of nuances, but I hope you did enjoy and understand. But let's just hope it's all cool, clean and nice. And I'll say thank you for watching. This is the strategy. This is a move, some movements to becoming profitable, and I really hope to become profitable. And again, it's still a demo account trading because again, we are in learning, and the goal is still to get to that point where we'll become profitable. So Thank you all for watching, and I'll catch you all on another one. Peace.